next video mortgage installment. Today we're going to go over the 7 questions you need to ask when speaking to mortgage lenders. This video will help you be as prepared as possible when making such a critical decision. So without further ado, let's go ahead and get started. Number 1, what is the interest rate and annual percentage rate? I know that you're going to want to, the interest rate is an obvious question. You obviously are going to ask what the interest rate is, but you also want to ask what is the APR. APR is a combination of the interest rate, points, and other charges on a loan. And it's really the best way to compare loans when you're shopping. When you have 2 lenders quoting you the same interest rate, ask them what the APR is, and whoever has the highest APR is the one charging you the most closing costs. So if, say, you got 2 people charging you 5% and one of them's APR is 5.1 and the other one's 5.2, the one whose APR is 5.2 has more closing costs. So it's a way to break down mortgages. So make sure you ask about that APR. Number 2, how many points will be charged? A point is 1% of the loan amount. Sometimes people call it an origination or a discount fee, but really they're both the same thing. And put quite simply, points are prepaid interest on a mortgage. When you pay a fee up front, and then you get a lower interest rate, and that's really what a point is. So you would say pay 1% of the loan amount. So on a $100,000 loan, you'd pay $1,000. And you say would end up with maybe a 1/4 point to 3/8 of a point lower interest rate, which would save you, say, $25-30 a month. So it doesn't sound like a lot. You're paying $1,000 to save $25 a month, but if you keep your loan long enough, it can work out. So it really just depends on how long you're going to keep your mortgage. What you want to do is find that break-even point, and that's where you divide the amount of the points, the $1,000, divided by the monthly savings, and that'll equal how many months it's going to take to break even on the loan. So if you think you're going to keep the loan longer than that break even, then pay the point. Number 3, what are the total closing costs? That's pretty. You want to go with the lenders charge. You want to realize that lenders charge fees in addition to points. So they're going to have some lender fees, usually some underwriting fees. They're going to charge you for the credit report, that kind of thing. There's also going to be some appraisal, attorney's fees, employment verification, and so on. Some of the fees your lender should be upfront and should be able to know. Some of them they're going to have to estimate, like things like attorneys. It's your choice what attorney we use. So until you pick an attorney and actually let the mortgage person get in touch with them, they're really only going to be able to estimate that. But they ought to be able to, if they're good, they ought to be able to give you an estimate, give or take a couple $100. So that, and then also they're going to be able to sit down and really thoroughly explain which these they're kind of estimating, so you can kind of get an idea. And one thing I always do on a mortgage is I always try to go worst case scenario from the start, so things only get better as far as the fees in the end. So anyway, you want to ask also, number 4, is there a lock-in policy? Are there any additional charges to lock in the interest rate and discount points? Lock-in, basically what a lock-in policy does is it guarantees your rate for a specific number of days. Like the bank I work for, we charge a lock-in fee, but as long as you go ahead and close with us, we just apply that to the appraisal. So it's really not a fee, but it's just what a lot of people don't realize is if you lock your interest rate in and you don't close, it actually costs the bank money. So we're just trying to offset that loss if you decide you're gonna, you want to leave. So that's basically it. If you decide you don't want to lock in at the beginning, you're going to be basically stuck with wherever rates are when you're ready to close. And so that I don't really recommend doing that. I would try to close, get your rate locked in before you start the process. That way you got an idea of what. You don't have any surprises at the end after you've had home inspections and paid for appraisals and that kind of stuff. And then, interest rates change constantly. So, you could have a 1/4 point jump in a day and it just happens to be the wrong day and you end up with a higher interest rate. So anyway, I would say, like I said, I would go ahead and lock and get it going before you start the process. So anyway, that's number 4. Number 5 is, how long does it take to process my mortgage? It can take, different banks have different processes, and different loan types take different amounts of time. So keep that in mind, that you want to ask is how long this is going to take, so you can make sure you have everything timed out. It's not such as important when you're refinancing, but when you're trying to purchase a home, it kind of makes a difference. With us, it's usually 2 to 3 weeks. Now, if you're going to do some sort of a rehab loan, that's a little more involved, and it's probably going to take longer than that. So you just want to keep that in mind. And also, one thing you want to ask for is, do the lenders that you're dealing with have local processing, underwriting, and funding capabilities? At the bank I'm at, we do everything locally. So, and what that means is we can get things done fast if we're in a pinch. So that's a good question to ask when you're interviewing mortgage people. Number 6, are you VA automatic or FHA direct? What that means is that the lender has gone through all the educational requirements that the government requires for you to be approved on these loans, and you can approve or disapprove loans in-house. So what that means also is the process is faster. You don't have to send the package off to some southeastern regional facility in Atlanta, and then might be 1,000 mortgage applications went in a day, and so we can approve it right here in-house, and it's just a much faster process. So it's a good thing to ask. Number 7, are there any prepayment penalties? That's a fee if you're going to pay the loan off early. And what you get in return for that is a lower interest rate. So you can, if you think you're going to keep your loan for a long time, having a prepayment penalty is not a big deal. So you might get a quarter or a half point lower interest rate. But if you pay the loan off in the first 3 years, you're going to be charged a penalty. So it's really depends on what your goals are. So you want to ask the question about, is there a prepayment penalty, and if so, what are the terms of it? And that way you can make sure you're getting a mortgage that best fits your needs. At any rate, that's it. That's 7 questions you need to ask when you're speaking to your mortgage person. So I certainly encourage any comments or questions, and I thank you for your time. Have a great day.